It is my pleasure to introduce Nisha, who's an ex-banker turned entrepreneur. She's a co-founder of the company C2X, which is into people development space. And now she's working to launch her ACE Venture Evangelist platform, that is HAVE platform, which is an initiative to scale up women-led ventures globally through investment and incubation. She is very, very qualified, an MBA in finance, a chartered accountant, and a company secretary. She has done her graduation from Kolkata. Her passion is to understand human behavior, and so she completed her courses in certified NLP practitioner and emotional intelligence practitioner. She has won various awards, both during her chartered accountancy and her company secretary. She is a very dynamic person from what I have seen of her. She is also the vice chairperson of South India Startup Support, All Ladies League Startup Support. Nisha, it is over to you. We look forward to a very interesting discussion. BCE and CE are referred to talk about when people refer to time, that is before Christian era and Christian era. But to repurpose it, it seems like before COVID era and COVID era is what people are very interested in. What is it that investors look for? What are they interested in? So Nisha, take over and let us listen to our experts.
Thank you so much, Sandhya. Thanks for that wonderful introduction. And okay, so thank you thank you so much for all the participants who are here, and to our esteemed panelists who have taken out time out of the busy schedule and agreed to share their point of view completely from investment perspectives, that when a startup is either some startup is doing some business or they're planning to start up, so what is the focus of the investors? So we are going to look completely from investors lens today. So thanks Surya, thanks Diksha, Pearl and Prasun for coming and gracing the this meeting. Sandhya, I think it's you are still in the thing. You can put it as a speaker view.
It is on the speaker view, Nisha.
Okay.
Yeah.
Okay. So fair enough. So I will start by just a simple context setting. So this is not a panel discussion. We are going to hear all our speakers one by one, and of course any of the speaker, in if Surya completes and if Diksha has something to add, or Pearl or Prasun has something to add, please feel free, don't wait. You can just jump in and add what your point of view, and same goes for each one of you. So I'll first introduce all the speakers today, starting with Surya. So Surya, thank you so much for agreeing to come on our forum. We are very, very privileged to have you.
My pleasure.
Thank you so much. And for the audience, I'll quickly read out Surya's profile. Surya Manta is a senior partner at Unitas Ventures. Surya has over 2 decades of experience spanning business operations, investing, and management consulting. At Unitas, Surya is responsible for all investment operations in India across Unitas focus sectors, including fintech, medtech, edtech, and employability. Previously, Surya played leadership roles in several high-growth technology and media business houses, including Web18, Saregama, Sifi, and Real Networks. He also spent several years in investment management roles, including impact investment at Omidyar Network and growth capital investment at People Capital. As a member of founding team of Omidyar Network India Advisors, he had led investments in e-commerce, digital media, education, government transparency sectors. Surya started his career at Xerox Research in Rochester, New York. Thank you, Surya. Surya, can you quickly say hello to our audience here?
Sure. Hi, hello, everyone. Thank you so much for the kind introduction. And I'm looking forward to the discussion here.
Thanks, Surya. Surya, I hope I have not missed out anything that
No, you have not. No, you have not.
Okay, great. So next, I would like to introduce Prasun, who is smiling. Prasun, would you like to say a quick hello so that everybody knows?
Guys.
Okay. Now, Prasun, I think he has worked with very, very famous startups, successful startups, I would say, like Mart, Redbus, The Media Ant, which we all are familiar with. He has co-founded companies like First Ride, Dr. Wheels in India, Singapore, and Kuwait. So I'm just mentioning few names. There are a lot to it. And his expertise lies in strategy, product, technology, finance, marketing. So the entire gamut of being an entrepreneur. And that's why he has been part of so many startups. He has invited as a speaker and panelist at various forums. And recently, Prasun started another venture called Her Ace Venture Evangelist, which is again a investment platform for women-led ventures. We will hear more about from Prasun. I don't want to spill the beans right now because he wants to speak about it. So anything else, Prasun, that I have missed and you would like people to know about you?
No, thanks a lot.
Okay, thanks, Prasan. So moving over to Pearl. You know, Pearl is a woman of very few words. So when I always tell her that, Pearl, give me a profile, and I have to really push her that you have done so much and why only such a short profile. But, you know, I'm not very good at convincing her. So
I totally second that. I completely
short
agree.
Profile, and don't go by the profile. Her experience is much beyond that. So she is the founder of Eximius Ventures, an early stage venture capital fund which focus on Indian women entrepreneurs. Prior to Eximius, Pearl spent 7 years across various investment roles in companies like Merrill Lynch, Utemco, and Global Infrastructure Partners in USA and UK. Outside the world, Pearl is an avid traveler and loves to travel a lot. She's also doing a lot of community services around women entrepreneurs, which she has not mentioned. But yeah, I would love Pearl to speak about that as well, what she told me in a last interaction. So Pearl, can you say a quick hello? And if anything I missed out?
No, thank you so much, Nisha. That was very kind of you. I tried to keep it short, but happy to expand for anybody else who would like to speak offline. Yeah, we can. Glad to see everybody here and look forward to the discussion.
Sure. Thanks, Pearl. Thank you so much. And last but not the least, the beautiful lady smiling away, Diksha Ahuja. Thank you, Diksha, for coming and gracing our webinar today. Diksha comes with over several years of experience across edtech, food tech, beauty tech, media tech, and healthcare tech. She is a serial entrepreneur. She has always been very driven, energetic, and passionate about creating value through her work. Her first venture was called Cedarwood, which was co-founded in the edtech space back in 2013, which is a platform that enables parents to discuss courses inspired by 21st century skills or for their children. Now, Cedarwood boasts of delivering more than 5 lakh hours of skilling courses for 5,000 students, and I can go on and on about this venture. Recently, she started her new venture called NQ which I think most of our women entrepreneurs would be interested to know about, in collaboration with Greenhouse Capital Africa, that aims at bringing up the percentage of women in the startup ecosystem from the current 14%, which we all know and which we all are working towards. The first cohort, which exclusively focuses on incubating women-led startups, had already been rolled out and is open for registration till the end of, it's already rolled out. So you can apply for the next cohort. And anything else, Diksha, would you like me to mention and I have missed out?
No, Nisha, that was absolutely perfect, and very excited to share my, point of view and interact with all the people here. So thanks so much for having me.
Thanks, Diksha. Thank you so much. So, keeping the momentum on, Surya, without wasting time, we would like to hear first from you. And the point that we would love you to cover is one, your fund. What kind of entrepreneurs or startups you look to fund? What are the focus areas, primarily keeping in mind post-COVID? I'm sure some change in the focus as well. And if somebody, from our forum who are here as participants would like to reach out to you, how can they reach out to you? We don't want to just leave it here by hearing. If they feel that it's apt to reach out to you, how can they reach out to you and take things forward?
Sure.
So that's my
Sure.
submission to you, and over to you.
Thank you. So Unitas is a early stage tech VC fund. It's a profit first impact fund. So basically, we strive to generate best in class benchmark returns for our investors with impact at scale. So we do not believe in subsidized capital. We don't believe that you have to necessarily sacrifice returns in order to get impact. And we are quite, that's at the core of our investment thesis, that you can get profits and impact. Of course, there is no one. While there are globally people are working on a definition of what impact would mean today, probably there isn't one consensus about what impact means for everybody. In our context, essentially it means improving the life outcomes of low-income populations, which is essentially people beyond the first 100 million in India, in the Indian context, because we operate in India, right? So we are talking about the next 500 to 600 million with monthly average household incomes of 15, 20, 25, 30,000 rupees, okay? And how do you give them access to opportunity so that they can improve their individual and their family's life chances and life outcomes, right? So that is at the center of what we do, okay? We have also evolved. We are now investing out of our second fund. So there has been clearly learnings from our first fund that we have incorporated into our investment activities. Also, the macro context has changed significantly over the last 8 years. I will sort of say what those changes are, which has helped refine our strategy, including sector focus. So coming to the macro context, what has happened over the last 5-6 years is that the India public tech infrastructure has come of age. So if you look at KYC, Aadhaar, right? Aadhaar now covers almost 1 billion Indians. If you look at the payments infrastructure, there is UPI with the whole set of private wallets sitting on top and all the other stuff. So it becomes cost efficient to charge large numbers of people small amounts without losing your shirt doing that, right? So there is the KYC infrastructure, there is the UPI payments infrastructure, there is a lot of work happening in the India health stack, which is still early. But the transformative thing is this thing that I hold in my hand, which is the smartphone. India is the fastest growing or second fastest growing smartphone market in the world. You can get an entry-level smartphone for 4,000 rupees. And of course, the lowest data rates in the world. In fact, there was a statistic going around saying, the average monthly data consumption in India is 4 times that in the US. So Indians have taken to mobile internet like fish to water, and and consuming content, whether it is education or pornography. The fact is the habituation of using the smartphone for the news, entertainment, and a myriad of content is there. Community, commerce, and connections, and what have you. So these 4 things, right? I mean, KYC, payments, smartphones, and data make it really possible now for a new generation of entrepreneurs to reach large numbers of people and deliver products and services in a way that they can, make money off it, right? If you had to do that brick and mortar, right, it becomes cost prohibitive. In fact, so in our fund 2, we will not invest in companies that do not use technology to reach customers in a cost-effective manner. Okay, that's one. Second is that in the kinds of businesses we invest in, we like to it is imperative that the companies have sound unit economics. Okay, because it's only then that as when you scale, when you get economies of scale, you're able to turn a profit. So we are interested in building, in investing in real businesses, not businesses that just get built with the momentum of capital and FOMO and all that kind of goods, all that kind of stuff, right? So sound unit economics is critical. Third, from a sector focus, earlier in our first fund, we, as I said, we did some brick and mortar, we did retail, we, essentially at that time, the investment thesis was that we will do whatever helps disadvantaged populations, right? There wasn't the kind of, say, fintech or job tech or health tech, so that you build expertise in those areas. So two things. One thing I already talked about, which is that the companies have to use technology in a significant way, either as an IP moat, intellectual property moat. I'll talk about that. We have companies that use machine learning and artificial intelligence on medical imaging, or use technology to reach customers in a cost-effective way. So that I talked about. The second important thing is sector focus. So there are three critically important sectors for us. Job tech / ed tech. Now this is the sort of the golden moment for ed tech. But job tech, essentially connecting, in the biggest challenge India has today is on the jobs front. The top three challenges in India are jobs, jobs, and jobs. There is a statistic, and everybody knows that a very large number of kids, by some counts over 1 million, enter the job market every month, and they're going to do that for the next 20 years. So if you wrap your head around that number, if it doesn't really sort of screw you up, then you haven't really understood the enormity of the problem, right? So whether it is on matching supply with demand, or improving skills and hence leading to better jobs, or providing making essential services to disadvantaged incomes, populations more accessible, whether it is financial services, healthcare, or skilling, and so on. These are the sectors that we focus in, right? Okay. So job tech, ed tech, healthcare, and fintech. Okay. So technology mediated, sound unit economics, focused on disadvantaged populations and improving their life outcomes, essentially through making painkillers, not vitamins, not nice to have, essential services like education, financial services, healthcare, all of that accessible, and sound unit economics. Those are the companies that we would like to evaluate and invest in. Those are the kinds of entrepreneurs we'd like to partner with, right? That they can scale up profitably. There is a path to profitability, and they can have impact at scale, right? Sure. And in fact, one of our very important criteria is that this sector needs to have commercial capital. It is not just impact capital that will, make all the difference. In order for you to have different, real impact, you have to be able to attract commercial capital. So it's a matter of pride for us that in many of the companies that we invest in, the Series A, B, C investors are all the commercial guys like Sequoia and Google and Chirate and Axel and so on, right? In fact, it is very interesting. Sequoia in their PPM, they have a covenant which says that Sequoia will not look at any aspect other than commercial returns while making their investment decisions. Okay. So that's how commercial they are. In fact, they have committed to their investors that the only thing they will consider as, while making an investment decision is that it should deliver superior returns to investors. So when Sequoia is a follow-on investor in 3 of our companies, then we know that we are doing something right.
Correct.
that we're actually attracting commercial capital into these sectors. And the recipe is very simple, guys. If you look at microfinance, it started with grant capital, moved to early stage, then to growth capital, then got late stage hedge funds, then went public and made a ton of money for investors. And in the process, also created a product and a service which has made differences in the lives of millions of people in India, South Asia, and elsewhere, right? So this is not about subsidy capital, right? And this is not about, okay, I'm just returning your principal and risk-free rate of return. No, this is about showing that you can actually do very well while doing good. That's the kind of entrepreneur we're looking for.
Thanks, Surya. Surya, so just to take further on this particular point only, what kind of amount that you invest in the venture and what stage generally do you guys come in?
So yeah, that's a good question actually, and there's been an evolution in that as well. In our first fund, we were very often, or not very often, almost always the first institutional investor.
Okay.
And we have written checks, seed stage checks of as little as $200,000 to $300,000, which is 1.5 crores or 2 crores, and in companies that are pre-revenue.
Mm-hmm, mm-hmm.
In our current fund, we've gone slightly further downstream. So there is a combination of both seed stage as well as pre-series A.
Okay.
So we like to write slightly larger checks of close to $1 million. Where possible, if there is a co-investor, we welcome that, particularly in pre-series A. And when we are writing pre-series A checks, we would like evidence of product market fit, some revenue and healthy unit economics and so on, so that the capital is then used for growth, right? So fund 2 is a mix of seed stage as well as pre-series A. Okay, I would say about half of them are pre-series A and the other half are seed stage, right?
Okay.
So, but there are 2 companies from Fund 1 where we were the first guys to write the checks, small checks of 2, 3, 4 crores, and they are now worth upwards of $100 million. So that's the kind of risk we take. So we are conviction investors. We are not momentum investors. And when we invest, we in our winners, we like to double down like anybody. There's nothing profound about that strategy. Every investor will like to double down on their winners. And we look for exits in Series C and beyond, in secondary transactions, or if there is an M&A, then an M&A.
Thanks, Surya. That really helps. Surya, would you like to share a few examples of where you invested and those guys have become like big guys now?
Well, I guess I'll give you an example of that. One of our companies from Fund 1 is a company called QMath,
Okay.
or QLearn, which basically is K6, now K8, K6 math tutoring and innovative math tutoring, not just rote learning and so on. And so what these guys do, they have a combination of technology and content, and they train housewives, homemakers, give them tablet content training and so on, so that they can give these classes to kids in their neighborhoods, stay-at-home moms.
Yes.
Okay, and they had over 6,000 moms across the country. Now, when COVID hit in March, obviously this whole thing went for a toss. But to their credit, in a short month of April, in that 1 month, they were able to move more than 80% of their teachers and students online.
Correct.
And not just that, they had an international market as well. They had a couple of hundred subscribers in the US, right? And where the ticket sizes and the margins were a lot higher. I mean, over there, in the US, for instance, they're willing to pay $100 a month.
Correct.
So they focused on they said there is no reason why our best teachers cannot teach the students in the US, UK, and so on. And today, they have their international numbers have crossed 15,000 and growing at a very fast clip. In fact, they are now closing a very big round of capital from large private equity firms, New York-based private equity firms, which takes their valuation in 3-digit US dollars, right? So that's an example. Another example, which is Better Place. Better Place is in the workforce, blue collar HR workforce management space, where now today they've become the de facto workforce management platform for India. The whole thing started with a very simple idea. There was the two co-founders. One of them was, a senior tech guy at SAP India in Bangalore, and they realized that their daughter in their school, one of her friends was harassed. No, not harassed. In fact,
Bullied.
yeah, by one of the not bullied actually, not by her classmate, by one of the employees, not a teacher, but some other. Yeah. So it turned out that he was a molester. He was a habitual molester. And that fell through the cracks when they did the due diligence. Okay, because the due diligence did not cover the prior history of molestation and those kinds of things.
Okay.
So they said there has to be a better way. Okay, and that was when actually this was back in 2015 or so, Aadhaar was becoming important and so on. And they approached Nandan Nilekani. And Nandan said, hey, there are these guys at Unitas, and they take these early bets on these kinds of technology platforms. Right, so we were the first guys who wrote a check to them. And so basically what they work with, large employers like Accenture, New Age, as well as traditional enterprises. And they basically manage the entire life cycle of their blue, gray collar employees, from sourcing, onboarding, engagement, payroll, upskilling, making services accessible, and so on. Okay, and the way they do for instance, if I am an employee, okay, and if I am on the shop floor, then there's an app, okay, and my supervisor can give feedback on me in real time, not just once, but for every interaction. If I'm a healthcare worker, then and I'm coming to your home and you have an aged relative who's being provided care, then you have the ability to. So basically, you're creating a trust profile for the employee.
Sure.
And it's an opt-in, and the employee by allowing people to give this kind of feedback and gets access to better jobs, to loans, and so on and so forth. So today, for instance, they have been selected by the NSDC, the National Skill Development Corporation of the Government of India, to be the platform for all the profiles of the graduates of the NSDC training and skilling centers. Okay. So they have over 10 million profiles, over 500, over 1,000 customers, B2B customers, for whom they manage the entire blue and gray collar employees, right? So talking about enterprises, that is another part of our strategy. We prefer to work with companies that take a B2B2C approach, okay, as opposed to a direct B2C approach, because B2C requires a lot of marketing investments. Right. Whereas B2B2C is much more capital efficient in that sense. Right? Absolutely. So those are two examples of companies. The third is a intra-city logistics company called Blowhorn, which basically provides a technology platform for aggregating last mile delivery. Okay. So if you are a small truck owner, right, you can get onto Blowhorn, okay, and get business, right? So these are early examples from Fund 1. Fund 2, we have lots of interesting companies that I can talk about offline with anyone who's interested.
Thanks, Surya. Thank you so much. And a very important question. So, all the ladies out there, and of course, all the entrepreneurs out there, I don't think I should use the word ladies because we have men as well who are hearing us today. So, if you are a tech mediated, if your business has sound unit economics, and if you're operating in the space of job or tech, fintech, healthcare, Surya is the guy to be, uh, to be run after, because they are into conviction investing and not only momentum. So if they see a real business value, you are rest assured you are doing good. So Surya, if
Yeah,
my
and one last point, by the way, we are one of the few firms in the country with a woman as a partner. And
okay,
and
thank
yeah,
you.
yeah, Radha, who's
Yes,
on vacation today.
yeah,
And also, in fact, if you look at the non-partner team, till about I would say 7-8 months back, we were the only firm which had an all-woman investment team.
awesome,
Then one of our
awesome.
teammates migrated to Australia, and so we had to we couldn't find we hired a guy. But still, of the three members of the investment team, two of them are women.
Thank you.
So all other things being the same,
Yes.
all other things being the same, we definitely look for gender diversity, and we would love to have women entrepreneurs who are sadly underrepresented in our portfolio. In fact, we have one company led by a woman. It's called SalesCan. Again, a terrific technology company which is in conversational analytics using artificial intelligence. But if there are, we would love to partner with women entrepreneurs.
Thank you so much. In fact, that is one of the statistics, again, a number going around that 92% of the VCs, the partners are male. So we need to have more women out there it's not that women are not good. It's just that we really need to get it more diversified, and so that women also get the confidence that, we are going in the right direction. So thank you, Surya. Thank you so much for your inputs. And I think you were very precise to the point. My last question is that how do I reach out to you? Not me, when I say I, the mind, all the participants.
You can just send me email, suryam@unitas.vc.
So guys, I will put that email ID with Surya's permission in the group, and from there you can just
Sure.
mail him and take things forward. Thank you so much, Surya, for your time.
My pleasure.
Yeah, so we will move over to the brighter side of the panel. Diksha, we'd love to hear from you now.
Great. It was very, very enlightening to hear what Surya had to share. And in fact, I'm in touch with one of the people at Unitas, in touch with Richa, Richa Natarajan.
Are you talking about Unitas Capital or Unitas Ventures?
So there are two.
Unitas Capital.
That's an investment bank.
That's
an investment bank. Yeah.
Got it. Yeah. Nonetheless, so Nisha, it was the reason why we set up Incubate, and maybe let me kind of give a little bit of a background, from where I come.
Yes.
I think I'm very, very different from the other panelists because we are not a venture fund, nor are we an investment bank. We are building a diversity-focused network to be able to help a lot of women-led or co-founded ventures scale up. And before I actually get into what that means, and of course, a lot of the end game for us is to be able to help women raise capital, from the right set of investors. But there's a big story that leads up to investing, and we're a large part of that. So Nisha, in terms of where I come from, I started my journey as an entrepreneur almost back in 2013, where along with two of my other co-founders, I did set up an edtech venture, which still very much exists. And back then the term was, not even coined. And just like anyone else who's entering entrepreneurship for the first time, there's never a playbook or rules. The only way you can figure out what works and what doesn't is by talking to other entrepreneurs, attending a lot of networking forums. And, often enough, when I'd be part of these and across the country, so not, only city specific, the one thing that was common was the lack of women, right? And I'm sure that you would agree with me. This is the one point that you also made, when you were kind of talking earlier. And that somewhere deeply bothered me, because I think women make great founders. They can multitask. They're very intuitive. They understand customer journeys. So the obvious question in my mind back in 2015 was, why do we have a lack of women represented in the startup ecosystem? In 2020 today, we just have about 14% women. So back in 2015, I'm sure the number was, much lesser. And to my surprise, there was really no formal data that was India specific that was, would help me unfold what the issues were and probably take corrective course of action. And that's when I decided to go the old house way. I spoke to about 500 to 700 entrepreneurs, all women from tier 1 towns and metros, because that's who I relate to. Spoke to investors, spoke to ecosystem enablers, and the one thing that came out as the underlying problem was what I had before I started this as a thesis, was that women lack access to networks. And what are some of these networks, right? Networks of mentors, experts, corporate partnerships, people who could help them grow global, investors, VCs, family offices. And because women are unfortunately not part of a lot of formal ecosystems and they lack this access, hence you don't see them making strategic relationships, you don't see them scaling up in the right way, you don't see them actually raising capital compared to some of their male counterparts. And there was enough data around the fact that diverse teams make for better teams. Again, very much in tune with what Surya had to say about profit first. For me, it was not a gender problem. For me, it was a problem that there is obvious data to prove that diverse teams show higher productivity, show higher ROI for capital when when investor money is invested. So why are we still not working towards that direction? And that's how all these thoughts culminated into what we curated and called NQBay as a diversity-focused network. And what we are trying to build is a connected ecosystem of all the stakeholders that I just spoke about. So mentors, experts, fund houses, investors, global partners who are going to be inclusive enough, and we are going to be helping a lot of women out there who are building great companies, who are building great products, to be able to access this network. And I'm 100% confident that once this formal access to network is provided to them, there's nothing stopping them from scaling up or even raising capital. So that's what the vision at NQBay is, and that's how we've built it together. Of course, what I'm saying is highly intangible in my mind, right? Building a network is highly intangible. And that's when we thought, okay, what is the most effective and the most tangible way to be able to give some of the women out there access to this network? And the other thing in our mind was that today, if we are to increase that number of 14% to 20 to 25, it's not going to happen in just a couple of years. It's going to take decades to do that. But what is the fastest way to do that? For us, in our minds, was a top to bottom approach. So if we can show more women-led or co-founded ventures scaling up, raising capital, being talked about, being successful, that will automatically inspire the current and the next generation of women to take to entrepreneurship. And of course, these networks will open up. And that's what our strategy and our vision at NQBay is. And coming to the tangibility of creating that network, one of the first flagship initiatives that we have introduced is the diversity-focused global incubator in partnership with a company called Greenhouse Capital UK and Africa. So we just launched applications around the second week of July, and we closed applications around the last week of August. And to my surprise, we got a phenomenal response. We had 150 plus applications received not only from India, but a lot of other countries too. So yeah, that's where we are. And I'm going to pause at this moment to, understand if there are any questions.
Yeah. So, Diksha, as you rightly said that, you're working towards getting more women in the system, and it's not a gender problem. It's we women have to be more proactive and, be open to the idea of getting funded, so a mindset shift is also required. And then, of course, having more network to go and speak out or get to know from where can I go this raising fund. So are you focused on any specific sector, or is it like anyone with a business idea can come and apply to your incubate?
Mhm. So I'm going to answer this question in two parts. So our incubator, which is, for this term, so it's a 6-month incubation program, and we open applications twice a year. So we have 2 cohorts a year. It's sector agnostic, but like I said, I've been an entrepreneur from the beginning. For me, this is not about doing charity or social work. I think it's about also creating sustainable business model, right? So we do look at businesses, of course, that have at least one woman in the founding team. But having said that, all the other criteria are not compromised on. So the businesses have to be tech focused. They have to be scalable ventures. A lot of times, the biggest issue that I have seen with women is the lack of vision, right? And, we try and mollycoddle a lot of our views, which I refrain from doing, because I think it's very important for us to, face the facts. We feel that we only want to be able to support those entrepreneurs who can dream big and do believe that their businesses can be scalable, right? Businesses that have an impact. And of course, these are the ones that will kind of end up being investable. That's for the incubation program, which is open to about 30 startups in each cohort. So we do about anywhere between 50 to 60 companies for the entire year. The second part, is something that we call the Incubate Network companies, where anyone can be a part of, be connected with the ecosystem with the aim of going from point 1 to point B. So you could be ideation stage, you could be just a potential, entrepreneur. You would want to know about the journey. You can join the network. But for the Incubate program, we look at businesses that have traction, have some kind of validation and test market already done. Because when we were doing our research, we figured that it's these businesses that have got traction, are extremely positive in terms of cash, have positive unit economics. They are the ones who fail to struggle to scale up because they are not part of networks, right? So that's the area that we kind of come in.
Thank you. Thank you. I think you are like the, backward integration for what Surya looks for when, their fund go for investments.
Yeah,
so good. At least we are giving him a good funnel to look at cases, because he's very open to invest into women-led ventures, and he also see a lot of potential there. But yeah.
No, I see a lot of, interest from the investor community, whether it's Surya. Pearl is one of our esteemed partners at Incubate, with us, as well as to support a lot of startups at Incubate that are women led. And we're seeing an increased, you can say, spotlight from VCs, from family offices to invest in women, right?
Yes.
Unfortunately, their problem to us is we don't know where to find these women, right? So that's where we come in, because it's about ensuring that we reach out to women. Correct. We let them know what it takes to be able to go and talk to a Surya, talk to a Pearl. There's a long journey there.
Correct.
So
Absolutely.
That's pretty much where we sit in.
Thank you. Thank you. And so, and to thank you so much, Pearl, and I'm sure, thank you so much, Diksha. So Diksha, if somebody asks that, is it a paid program, your Incubate, is it a paid program?
Yes, absolutely it is. And I'll kind of explain that to you. We are an equity come a fee-based incubator. And the reason we do this is, and I'm going to come back to my philosophy, that this is not charity. I don't come with a lineage of, a lot of money that this is social work for me. I truly believe in the business cases that women bring forward. And I feel that if I am doing this to be able to help them scale, it has to be a sustainable model in itself. We bring in a lot of value for the startups in terms of helping them with their strategy, helping them connect with the best in the class mentors, virtual learning, helping them go global, connect with partners, and even on the fundraise side, right? There's a lot of value add that we bring in as an entity. So yes, it is a paid and an equity-based program. However, the value that we end up giving. So if you were to calculate your ROI, it is hugely positive compared to the value that we end up taking.
Absolutely, absolutely. Thank you so much, Diksha. So I would request my speakers here, if they're okay, they can type their contact details, you know, maybe email or wherever on the chat box, so that the participants can just make a note of it immediately right here. So Surya mentioned that he's okay to get connected through email. Surya, if you can put your email on the chat box, that would be great. Similarly to Diksha, Pearl, and Prasun, you know, if you can give
Sure, sure. No worries. I'll do that.
yeah, thank you so much.
Happy to do that,
Yeah.
just putting in the email ID.
So thanks, Diksha. Thanks for sharing with us about your journey, why you're doing it. There's so much of vision and passion. It's so evident, and I'm sure you will have a lot of traction from this platform. A lot of people reach out to you for your program. I know I know what Diksha is doing, and to all the participants out there, the value she's talking about is understated. It's much beyond that. So go for
and
it, have a
Nisha,
chat
I
with
just,
her.
yeah, thank you so much for that. And I'd just like to add in, you know, Sundays is a day that I actually keep free to talk to founders. I don't do any other work on Sunday, but it's only reserved for, you know, women founders. I'm very active on LinkedIn. Please reach out to me. I'll also put my email ID, and happy to set up a time, have a conversation with you. You know, that's part of building the network.
In fact, you know, when I was talking to women entrepreneurs that we are doing this program and what are the certain challenges, so the very first thing they say that these guys are not reachable. You know, how do we reach out to them? I'm so happy that you guys are giving the contact and ready to hear their stories or why they do need fun and how they can grow. So thank you so much for that. So thanks, Diksha. Thanks for your inputs, your contact details. So moving on from Diksha to Pearl. Now, Pearl, Diksha said you are one of the stakeholders in our incubate, and we would be very keen to understand that how are you, like, you know, in how are you helping incubate to grow? Like, what are the ventures? Are you also looking only to invest into women-led ventures? Is it very women focused? And you know, about your Eximius, what kind of on very similar lines, that what are the certain sectors that you're looking at to invest, and how and what kind of women entrepreneurs you're looking for, at what stage they can come and get in contact if they were looking for funding. So over to you, Pearl.
Yeah, sure. Thank you, Nisha. So I'll sort of tell everybody a little bit about Eximius and what we are trying to build here, and then sort of dive into the other questions that you have. In terms of Eximius, no, it is something that is very personal to me. We are focused on women entrepreneurs, and I'll go a little back to tell you why. So I grew up in an entrepreneurial family. While growing up, both my parents were trying to set up their own businesses, and I was helping them out during my weekends, holidays, etc. And I saw a huge discrepancy between a man leading a business and a woman at a very early age, and also the opportunities that were available to women at that stage. Of course, I'm talking about a time when venture wasn't even a word in India. And the only capital you had available was after mortgaging your house, when you could get debt funding. But what we've realized is that in the last couple decades since then, having worked across the world, this is first a global problem, and second, it hasn't changed much even in India in the last 20 years. Yes, a lot of privileged women have been able to come out and be able to get funding, but that only happens after Series A. So once you've already scaled to $1 million ARR, or you've sort of proven traction, that's the only time you get support. But early on, there are a lot of women who might have passion, who might have a great idea, but don't really know how to build businesses around it. What is something that can take them from, let's say, a 0.5 to 1.5? Because 0 to 0.5 might still be easier, where they can develop a product, but to be able to scale it to that level where it actually becomes fundable is where we've realized the death of valley lies. That might come a little after where Diksha is, but also a little before where Surya would like to probably come in. And so that's what we want to look at, because we don't think that just catering to one point of a woman's life cycle, a business life cycle, is necessarily helpful. So we would like to write checks of about 150 to 200K, come in at stages where they have developed a product, there's an MVP, they've built the initial team, but want to scale revenues and grow. So we have a product in place where we would help them scale their businesses and take it to about 200 to 300K, at which point they'd be able to raise future rounds from larger VCs. We'll continue to support them until Series A. At that point, our check sizes are too small for it. So we sort of let them go and hand them over to investors like Surya. So that is the entire business model. And we definitely focus on women. However, we are not just exclusively focusing on women. The way we sort of say it is that we give precedence to women. What that means is if you're a man who is open to having diversity in your leadership team, we will have a conversation with you. We will try to understand. And if we like it, then, along with our capital, we'll put in a term that says that you are anyways in early stage, please go ahead and diversify your team, because we have seen historically that leadership team with diversity have done better. They bring a lot more empathy. They understand consumers better. Also, as the economy grows and women participate.
Just a second, Pearl, just a second. Saloni, could you please mute your mic? Just a second. Yes, Pearl, sorry for this. Yeah.
And no worries at all. We've all living in this environment currently. So coming back to my point about diversity. So, we would, along with our capital, will sort of tell them that you are anyways in early stage, you need to add more to your team. So why don't you look to increase diversity? Because historically, those teams have performed better. They have more empathy. Moreover, as women participate more in the labor force and the disposable income increases, they're also going to become a large part of our consumer base. So if you have women, you'll be able to cater to them better. And as both Diksha and Surya pointed out before, we ourselves look for path to profitability, because we don't think that the impact thing has been going on for a while. It's been almost 3 decades or so. People have been investing in women as an impact category, but we don't think that for them to become mainstream, that it can go on. We want to bring them to mainstream by making it sustainable, and we want to sort of show to the follow-on investors that there's path to profitability. In terms of our engagement with Diksha, we've had a great experience so far. They are doing a fantastic job. We're just there to support them to the extent needed. Of course, this is a great way for us to see companies that are woman-founded, woman-led, and what they're doing. It's sort of beneficial for us because they work very closely with the companies that they incubate. They provide them with the right resources, mentorship, to sort of help them create that initial either MVP or initial traction. So it gives us more comfort where we can sort of benchmark them across their journey, when they're at incubate, and sort of take a leap at that point. But other than that, also, it's a great opportunity, through the women network, for us to meet other women who might not be at that position, but eventually can get there. So in any way that the incubate team requires, we are sort of supporting them both on the strategic side as well as by taking a serious look at the cohort companies. So now moving on to the sectors that we are focused on. So we're definitely looking where we are sector agnostic at large, because we are sort of restricting ourselves to being able to create diversity at the leadership team. However, at this point, we are very much focused on sectors that are positively impacted by COVID. I just want to take a pause and say that by positively impacted, we don't mean businesses that are built for COVID, because businesses are built for 5 to 10 years, and somebody has to really believe in it, be married to it to be able to run it for that long. But something that has been accelerated due to increased digitization. And one of the sectors that has started to receive some interest, but I still feel isn't being talked about as much, is the MSME digitization. Like what we've seen is there's a lot of potential. We ourselves, on a day-to-day basis, we interact with small businesses, having come from that background. We see people, family and friends talk about it. Their approach to technology and digital sources before versus what it is today. They're a lot more open, a lot more willing to spend on it. In fact, in the last 2 months, I've had a lot of family friends who've called me up and asked me, do you know something that can help us, reduce our security personnel? Or do you know of something that can help us digitize our hiring process, which they weren't even thinking of before, because they were so happy with their paper and pen approach. And also, Airtel recently came out with data that they said in the last quarter, they have added almost 500K SMEs onto their platform. So from 500K businesses, now there are over 1 million, which means that in the last few months itself, there's so many businesses that have realized that they need to go online. There were times when revenues were almost down to zero. They couldn't interact with any of their co-workers or their employees outside of WhatsApp. So what we focused on is looking at a lot of businesses that might be taking the WhatsApp business to a more formal channel. For example, we came across these great guys who are building a software that would help you detect any breach in SOPs. So essentially, it's a small software. You attach it to CCTV. It sort of follows multiple SOPs at the same time. And the minute there is a breach, the entire organization would get an alert saying that this person is not wearing their cap, or there has been a leak, a gas leak, and etc., which is extremely helpful. So something like that. And then even, there are multiple other things that can be done where businesses don't necessarily need to spend a huge amount. With 50 or 100 rupees per user, they'd be able to bring a lot of their employees online and deal with them on an ongoing basis. So that's one area that we are very focused on, and entertaining a lot of people who are building businesses along those lines. The second one is definitely health tech. We aren't necessarily, again, focused that much on deep tech in terms of health tech, but in anything with mental fitness, physical fitness, at home fitness. I think that's going to be another big tailwind coming out of COVID, because people have become increasingly concerned about remaining fit on an ongoing basis. So whether it is interacting with your health coaches or interacting with your family doctors on an ongoing basis via an app, or it is to be able to get the right dermatologist on one platform, whether it is a mental wellness platform. Sometimes there's so many people in India who are not even aware that they might have some sort of mental issues or mental illness. At some point, they sort of hide it. They continue to face challenge internally. So it's very important that these issues are also catered to. So we're looking at that. The next one is women's health. We feel that this is one segment that has been ignored so far. Women are very different from men, and the health issues that they face, while in certain cases might be similar, in several other cases are very different. For example, we can take PCOS or something else, which might not even be a health issue at this point, but just a syndrome. So anything that's coming out to sort of deal with that, create a community to monetize it. That's another aspect. And then, of course, the big word that everybody's been talking about, edtech. There's, I think it's, sometimes I feel it's blown out of proportion, but there's still real use cases within edtech that can be solved, specifically in the pre-K segment. I think as the government with NEP 2020 is trying to bring more 2 to 5 into formal education, a lot can be done, which hasn't been done yet. It is more than just watching videos and picking up words and playing with Disney characters. They can be given wholesome learning opportunities across different dimensions, whether it is English, math, language, rhymes, or it is also how to interact with your peers. That social awareness aspect can also be brought in. In addition to that, something that I saw my niece doing, and I was like, why haven't they solved for it yet? My niece is 6. She has to take all her classes online, and she sleeps through most of them, even though she only has to do 2 hours. So definitely, Zoom classes can be turned into more interactive social platforms where kids can be engaged further. Because unlike somebody who's in class 5 or class 10, kids necessarily are not that attentive, not over a screen. So that's another aspect that we are very much focused on. And the fourth sector that we are actively looking at is at-home entertainment, whether it is gaming or at-home content absorption. I think that has huge potential. Cinema theaters have been closed for a long time. So not necessarily OTT platforms, because there are several and have been aggregated at some point, needs to move towards consolidation, but support the ones that are supporting them. For example, in terms of content, gaming content, people want to learn how to play certain games, but they don't know. So there can be ancillary business models that can come around that. I think I've spoken quite a bit about our entire business model and the sector. So I'll take a pause and let you ask me any questions you have.
So Pearl, it was like you were reading my mind, you were completing, and I was about to ask the question, and you used to pick up that point and say, this is my next thing, this is my next thing. So honestly speaking, I think for all the audience out there, we are hearing this word again and again from the investors that the focus is on job or ed tech, as Surya mentioned, fintech, healthcare, health tech, and now one more thing you have added, so of course all these things are there in Pearl's kitties as well. What she has also added is home entertainment. So guys, if you have anything, any idea or working on a business model which works around these sectors, please reach out to Pearl. She has also shared her contact details. I think Pearl, we will give you some time to breathe because you've been talking and adding so much of value. Thank you so much. And moving over to Prasun. Prasun, yes, the stage is all yours now. So what does have to offer?
So have focuses on women-led ventures, and why we focus on women-led ventures is very clear by what other speakers have already said. I'll just reiterate it. So we have approximately 50% of women in the population, but yet only 14% in the business and 22% in the labor force, and only 17% participate in getting funded. So there is a huge gap and a huge opportunity. So that's what we're looking to tap on. And what we believe in, that apart from the numbers and apart from the fact that there is a huge gap and we will lift the ones which are not yet lifted, the fact is that we firmly believe that there are enough women entrepreneurs who can create some good successful startups. And the reason why it's not happening is two major reasons. One is biases, which will overgo over a period of time. There are two kinds of biases. Mainly the women herself have it, that okay, they don't have trust in themselves or any kind of belief, and the society biases. Apart from that, the second major thing is that there is not enough platform for them. So what have is eventually going to do is create a ecosystem for the women entrepreneurs. So any woman, not even an entrepreneur right now, who dreams to be an entrepreneur or is an entrepreneur at some stage, be it early stage or at a growth stage, so we will create one self-service model wherein they can learn few basic things of building businesses and growing them. And once they reach to a certain extent, that's when it becomes a pipeline to us, wherein we invest in them and we grow them further. So one would be a typical online self-service model platform, and the other one would be investment platform where we would invest money and mentor them and give them market access. So we are sector agnostic right now, and the way we look at the businesses where we invest is it should have some early traction, and it should have business fundamentals. It's not, it's again for profit, it's not for impact directly. And yeah, so that's about what have is. We are very early right now ourselves, and we are yet to launch. But yeah, we are happy to look at any women entrepreneurs out there looking for any kind of help. We have huge network of people, mentors and investors, so we can help right away, and please reach out to me for that. Any questions?
Yeah. So, Prasan, when you're talking about this platform, so what's the typical size of investments that you plan to do in this early stage women-led ventures?
So right now what we're looking at is 50 lakhs to 2 crores for any venture.
Okay. And any sector focus, you said sector agnostic, but are you
So we might look out ourselves for consumer internet and consumer brands, but if a startup wants to come down to us, we have not put up any board that okay, we are restricted to this. So yeah, so what we look out for is consumer brand and consumer internets, startup related startups. But yeah, they can come apply for anything, like any startup can apply.
Okay, so I think I will open this question to all of you, all the panelists here, because Prasun brought up a good point. You know, Surya, Pearl, Diksha, any of you can jump in and answer it. When you say women-led ventures, what's your definition? You know, if suppose there are, 5 founders on the table, and if there's only one woman and 4 male founders, are you okay to look into it? As in, what's the criteria when you say women-led ventures? And I'm just trying to establish a fact that do all the investors look from the same lens, or we have a different definition, and I also have a different definition. So let's hear it from each one of you. What's your definition when you say I am looking to invest into women-led ventures? Surya, if you would like to
Yeah,
throw some
sure.
light.
I mean, this is not currently a big filter for us. I mean, this is not a attribute that we focus on. But obviously, the first step would be if there is a woman co-founder, right? So on the founding team, if you have a woman in a leadership role, then that would be definitely a lot better than not having a woman.
Okay.
Ideally, if the woman was the animating force, if she was the main founder, then that's the ideal situation. But I have to say that looking for women-led companies is not a mandate that we have. I mean,
Got
our
it.
mandate is profit and impact, right?
Yes, absolutely. Absolutely. Thanks. Prasun, what's your definition when you say women-led ventures?
So for us, it's very simple. There should be one woman co-founder in the company and at least having a majority stake in the company.
Okay. So Pearl, do you have any other definition, or we are good with what Surya and Prasun said?
I think I've sort of explained my definition before.
Yes.
We want one woman in the leadership team,
Okay.
or space for them in the leadership team. I think
Okay.
that's what we are aiming for.
Okay. Okay. Thanks. So one of the questions that have come again from the participants is you have been using unit economics. So what are the metrics you use to gauge unit economics? Surya, would you like to pick it up? Pearl, Diksha, anyone?
I'll ask the other panelists to talk about it.
Sure. So investors keep using the word unit economics. What are the metrics that you gauge at?
Unit economics itself is a matrix.
Okay, so what do you see?
Maybe I'll try to explain. So by unit, if somebody says what is your unit economics is, what is the cost of rendering one particular service or a customer, and in return, how much money and marketing and other places you're spending. In total, what is your cost to render one customer, and what is the profit over it? So the unit economics would be the cost.
Okay.
Like the profit you make per
customer,
sale or per service or per customer.
Sure.
And that varies from business to business.
Yeah,
you have to get the unit economics right. So for instance, if you have a retail center-based business, then the unit economics, the unit is the center.
Correct.
It is not necessarily one person who comes into the center. So you have to think about the unit economics very, very carefully. The granularity of that and the definition of that changes from business to business.
Thank you. Yes.
In fact, very interesting point here. So a unit economics for a particular startup might be very small, but the numbers might be huge. So it'll still work out. Whereas for some other startup, one single customer would fetch 10 lakh rupees, and then the number of total customers would be smaller. So as he said, as Surya said, unit economics will differ from business to business.
Okay, thank you. One very specific question for Pearl. Pearl, what do you look for in a founder? Apart from, like, are any qualities that the founder need to possess?
I think what we look for is no different from what others look for, because what we are trying to say is that entrepreneurship is gender neutral. So it would be very similar to what you would hear any other VC fund saying. We want somebody who's very passionate about the problem that they're solving, somebody who can demonstrate that they can take the business from 0 to 10, has execution capability, has the ability to learn quickly. I don't think that possessing all the skills is necessary for us, but the ability to learn quickly and also surround themselves with the right kind of people who can help their business further. So these are certain things that we look for.
Sure. Thank you. Surya, do you have any specific checklist before you invest in a founder?
Nothing that others will not have. I mean, this is not, there is no sort of, the secret sauce is really equal parts judgment and luck.
Okay.
That is what differentiates, the folks who do well from those who don't. But in terms of a checklist, pretty much everybody looks for a great team that works well together, a large market, some competitive differentiation and potential for creating a moat? Or are you a Me Too business? Looks at competitive intensity. If you're an early stage investor, you look at whether this will be exciting to follow on investors. That's very important. And if so, what are the metrics that they would be looking for 12 to 24 months down the road? And if you believe this business will be able to achieve those metrics, right? So the thing is, it's not just about writing a check, it's about getting a check back.
True.
And which is notoriously difficult, also in this country, right? Writing checks is the easy part of the investment game. Getting a paisa back for what you've written is the hard part.
Right, that's right.
So all those considerations come into play, and in the early stage game, the quality of the team takes preponderance, because that's what you're investing behind, which is the team, right? And when all of this is said and done, luck plays a big role as well.
Yes, absolutely. Thanks, Surya. Diksha, this question is very specific to you. When is your next cohort starting? And a lot of women would like to reach out to you as well on that.
Sure. So the next cohort, we will open applications in around the 3rd week of November.
Okay.
So you can apply by then. You can just be connected on our website. We'll be announcing it. Also, my team is extremely active on social media, so do reach out. But I'd also like to say that as part of the Incubate initiative, we hold a lot of networking events. We do things where we want to normalize failure. We do an IP called Startup Hiccups, where we invite a lot of entrepreneurs to share their failure journeys. We do a lot of founder mixers. We do a lot of speed virtual networking sessions. So I think Incubate is more than just the incubation program, and anyone here today is more than welcome to engage with us in any of these events, and we're pretty active on putting those out on social media.
Thank you so much. I think thank you so much, Diksha. Thank you, Surya, Prasun, Pearl. I will now hand it over to Sandhya. We are very particular about timing, so we are sticking to the time. So handing it over to Sandhya. Sandhya would like to take it forward from here.
Hi, Nisha. Thanks. I'd like to ask if any of the participants would like to ask any questions, because we still have some 4 minutes before the vote of thanks can be given. Proposed. Any of the participants, any questions? Please unmute yourself.
Yeah, if they want to ask directly, yes, that would be great. I have taken most of their questions, Sandhya, by the way.
All right.
Yeah. And they have their email ID. They can always write it to them directly as well.
Certainly. So thank you. And I will call Khushbu Gupta to propose a formal vote of thanks. Khushbu Gupta is a member of All Ladies League. She's an entrepreneur. She's into event space, and she has been a very critical part of our Digital Women Economic Forum in Bangalore. It was her venture that helped us put it out there. Khushbu, over to you to thank all the panelists and everyone else.
Thank you so much, Sandhya. Apologies for my video not coming up. I have a small network challenge, but however, I would like to express our gratitude to all our esteemed panelists for this afternoon's discussion on investment strategies for startups. Thank you, Mr. Surya Mantha, Senior Partner at Unitas Ventures, Ms. Pearl Agarwal, Founder at Eximus Ventures, Mr. Prasun Agrawal, Co-Founder of Have Investment Platform, and Ms. Diksha Ahuja, Founder of Incubate. Thank you for the valuable sharing and insights. I'm sure all the participants have a lot of takeaways and you're going to be bombarded with emails. A big thank you to the curator of today's discussion and our moderator, Nisha Dhanuka, co-founder of C2X and her ACE Venture Evangelist. And thank you, Mrs. Sandhya Rao, the All India Chairperson for All Startup Support and founder of Wikibare, Mrs. Priyanga, Mrs. Lakshmi Shankar, and to the entire Startup Support Chapter team, without which this event was not possible. And how can we end this without thanking all of you who joined in for today's session and made it all worth it. So thank you for joining in. Stay safe, stay hungry, and keep growing. Back to you, Sandhya. Thank you.
Thank you, Khushbu. Thank you. Yeah, we will stay hungry certainly, and hopefully stay foolish too. That's what an entrepreneur needs, right?
True.
Uh, those who want to connect with our panelists, they have shared their email IDs. Uh, One of the participants wants to know about investing in a startup venture. So I'm sure she will reach out to all of you or one of you. Thank you once again. Thanks, Nisha. Thank you all.
Thank you, all of you.
Thank you,
Surya,
guys.
thanks for your
Thanks
time.
so
Thanks,
much.
Thank you
Nisha.
so
Thanks
much.
for.
Bye
Thanks.
bye.
See you
Bye.
guys. Bye. Take
All the
care.
best.
Bye.